AI advertising and lawsuits. Google is facing it all. But is Wall Street pricing it right? Is it a golden opportunity or an overhyped gamble? In this video, we are diving deep into the numbers, the news, and the future of one of the most powerful companies in the world. What is driving Google's stock right now? Where could it be headed next? And most importantly, is it now time to buy? Let's break it all down. But before we do, if you like this type of content, could you please hit the subscribe button? That would mean a lot to me. Overview. Let's quickly summarize what kind of businesses Google owns. Originally just a search engine company, Google has evolved into a sprawling empire of products, services, and experimental moonshots. Alphabet operates under three main segments: Google Services, Google Cloud, and other bets. Google Services, this includes Search, YouTube, Chrome, Android, Google Maps, Google Play, and hardware like Pixel devices. This is where the most of Alphabet's revenue comes from, mainly through digital advertising. Google Cloud, a fast-growing segment that provides infrastructure, data analytics, and AI tools for enterprises. Other bets, this is where Alphabet's experiments are. It includes companies like Waymo, Verily, and DeepMind. These businesses are currently not profitable, but they represent Alphabet's long-term innovation pipeline. So Alphabet isn't just a search engine company. It's an ecosystem that touches every corner of the tech world and, to my mind, a super quality company. Recent news. There are two major court cases that have to be talked about before we can evaluate the future and come up with an estimated buying price. DOJ sued Google for alleged monopolistic search engine and advertising technology monopoly practices. We will start with the search engine monopoly case. In August 2024, US District Judge ruled that Google unlawfully maintained a monopoly in the online search market. The DOJ argued that Google's exclusive agreements with companies like Apple, Mozilla, and Samsung hindered competition. The agreements made Google the default search engine on their devices and browsers. These agreements reportedly generated over $26 billion in 2021 alone. Judge concluded that Google acted monopolistic to maintain its monopoly, violating antitrust laws. Following this ruling, DOJ proposed remedies, including the sale of Google's Chrome browser and the Android operating system. Also a ban on paying third parties to set Google as a default search engine, and that Google should share their search index with competitors. Google has announced plans to appeal these decisions. So to be clear, these are still proposals, not 100% guaranteed facts. And the second one, advertising technology monopoly case. In April 2024, judge ruled that Google held illegal monopolies in the digital advertising technology market, specifically in the publisher ad server and ad exchange sectors. The DOJ argued that Google integrated these services in a way that suppressed competition and harmed publishers. The court found that Google engaged in anti-competitive practices. While the DOJ did not prove Google's monopoly in advertiser ad networks, the ruling paved the way for potential structural remedies, including the forced sale of key ad tech assets like Google Ad Manager. These rulings mark a significant shift in antitrust enforcement against major tech companies and could lead to substantial changes in Google's business operations. The outcome of these cases are still unfolding, with the appeals and potential remedies to be determined in the coming months and years. Here you can see the outcomes of DOJ cases on the last 2 decades. Past DOJ success rate hasn't been the best. At least in my opinion, DOJ has won only the cases that are easily proven or in which even a normal person would see the DOJ's argument. Even though courts ruled in favor of DOJ in the past, they have overruled the past judgments, like in the case of Microsoft. In a fast-moving tech world, antitrust cases just move too slowly. The DOJ is going after Google for dominating in search, but by the time the ruling actually happens, AI tools like ChatGPT and Gemini might have already changed the way we search altogether. So yeah, the case is worth watching, but it might end up solving a problem that no longer exists. That said, if Google is forced to break up, it might not be all that bad for investors. Often, splitting up big companies actually unlocks value, because individual parts like YouTube or cloud could be worth more on their own than as a one giant company. So either way, the real question isn't the lawsuit, it's how well Google adapts to the AI future. Let's take a quick look at Google's major businesses and to their future. Where they stand, what's threatening them, and what's giving them an edge going forward. First up, search and ads. This is Google's cash cow. It still dominates the market with billions of users and some of the best ad targeting in the world. But it's facing real threats. AI tools like ChatGPT are starting to change how people search. If users shift away from typing queries into Google, that's a long-term risk. Plus, regulators are watching closely and antitrust pressure could shake things up. Then there's YouTube. It's still the king of online video and it's growing fast, especially with YouTube Shorts and connected TV. But competition from TikTok and Reels is real. If creators and users shift their attention elsewhere, YouTube could feel the squeeze. Still, it's a strong platform with huge ecosystem. And I feel like YouTube isn't going anywhere anytime soon. Next is Google Cloud. It's gaining momentum and starting to carve out a solid position in the AI infrastructure space. It has big enterprise clients, smart integrations, and strong growth. But it's still playing catch up with AWS and Azure. But its growth is super strong, and I still believe Google Cloud will be the number one business for Google in the next decade or two. Android and the Play Store are another big part of Google's business. Android dominates globally, especially in the emerging markets. And the Play Store generates solid recurring revenue. But regulators, especially in the EU, are cracking down on the App Store fees and practices, which could cut into profits. But same as cloud, I believe this part of the Google's business will still keep on growing. And finally, AI and DeepMind. Google is a pioneer here. Models like Gemini are already being rolled out across their ecosystem, from Gmail to search. And what's the challenge? The competition is intense. OpenAI, Microsoft, Anthropic, they are all moving fast. And it's still unclear how Google will fully monetize this shift, although everybody else has the same problem. So overall, Google's got deep moats and world-class assets. But AI has a possibility of reshaping the tech landscape fast, especially search. The company's future depends on how well it can adapt before somebody else eats its lunch. When it comes to the DOJ case against Google, if I had to guess, I think the DOJ will technically win after years of court battles and appeals, but there won't be a breakup. It will be likely to play out like the Microsoft case. Big headlines at first, talk of breakup, but in the end, just some restrictions. Maybe a fine, and Google continues on. By the time decision actually lands, the case will feel outdated, and they'll probably settle on a few rules that Google has to follow. But keep in mind, this is only my opinion, and unfortunately, I cannot tell the future. Intrinsic value. Now let's estimate a buy price for Google. Google is up by few percent in a year, up around 155% in 5 years, and around huge 500% up in 10 years. Google's revenue per share has been growing over 10 years straight. Similar situation with EPS, except some minor volatility. Google's EPS is around $8.91. They just had their quarterly results come in. They had a EPS surprise of $2.81. Right now PE is around 18. ROE and ROIC are around 30%. Dividend around 0.5%, and little to none short interest. Analysts are estimating a low double-digit growth, and I agree. Just from last quarter, they increased their EPS around 30%. But still, I would estimate a conservative growth of 10% for the next 5 years, and after that 5% for the next 5 years, just to have some margin of safety over the uncertain future. And as per usual, I want 12% for my money. Google's PE ratio is really low, at least compared to other tech giants, but also as a normal company growing this fast. In my mind, Google should trade with the likes of Apple near 30 PE ratio. But let's be conservative and say it will trade at a 22 PE ratio in the next decade. With the current stock price being around 160, we are estimating around 15% returns. And our buy price would be around $206. Here you can see also other prices and returns accordingly. Conclusion. So, is Google a buy? Despite the noise from lawsuits to rising AI competition, Alphabet remains one of the most powerful and profitable companies in the world. It's diversified, cash-rich, and still growing. Yes, there are risks, but historically, regulatory actions like this rarely lead to breakups. And if they do, they can sometimes unlock even more value for shareholders. With strong fundamentals, a low valuation relative to its growth, and a clear push to AI and cloud, I think Google looks like a solid long-term investment. In my opinion, Google is a buy. But as always, this isn't financial advice. Make sure to do your own research, understand the risks, and invest based on your own goals and strategy. Well, what do you think? Is Google a buy? Was my analysis way off? Do you think they will break up Google? Please comment below, and as always, leave a like and subscribe. Remember not to lose your money, and safe travels. Bye bye.